Welcome to Markets Now. I'm Michelle Rook with Deer and Frywater Street Solutions. Mixed closes in both grain and livestock futures trade on Friday. Darren, I want to start talking about the grain trade first. Wheat did close higher on Friday. We also had higher weekly closes. Do we have all of the weather premium moved into that market or priced into that market yet?
Well, Kansas City closed pretty strong. We saw Chicago put in a little bit of a reversal after rejecting higher prices. But the Kansas City wheat will be watching the forecast very closely. There is an optimistic forecast there to get some moisture in the western southern plains. Obviously, if we do that, then we could see Kansas City down harder than Chicago. But the strength really came from the fact that we haven't had the rain yet, and let's see what happens. Crop conditions were off last week, and we'll have to see what they are this next week. But if they're off again, it'll probably be in the west because the east is in pretty good shape.
Absolutely. We'll be watching crop conditions and on Monday and, like you said, the weather. But the funds now, they have covered some shorts. Technically, we've gotten above the 100-day moving averages, and I think all three classes of wheat. So technically, is there enough momentum there, do you think, to get funds to keep covering shorts?
Yeah, I would think that they're a little bit nervous given how far we've moved off the bottom. But, as of a week ago, they hadn't covered a whole lot, and we'll see what happens in this next COT report. But the funds have a lot of profit made in wheat. They've been short for a long, long time. It's been the commodity they've continued to punish on every rally. And so I wouldn't expect them to bail quickly. Other markets that they have less money in, that might be the case. But wheat, they've been short for a long time, and we might not see them adjust so quickly.
In the corn market, we did have a lower close on Friday, but we had a higher weekly close. Wheat has been helping to pull the corn market along, but we're still in our trading range. Do you think we can break out of it?
Well, we will. We will at some point. The question is which way, and we could break out to the downside and make new lows. We could break out to the upside and say we've marked a low for the year until we get to harvest. But I think it's going to take a couple things. It's going to take USDA to recognize a different size crop in Brazil and in Argentina. They didn't make any changes on the last WASDE. I think the market has to see that. In addition, we have to have some trouble getting this crop planted. Some people want to talk about delays, but it's way too early for that. Down the road, a couple weeks, maybe we can talk about delays. But right now, I think it's going to come down to what do the funds do with their short position, and what does the USDA do on this next WASDE report?
So you don't think wheat moving higher is enough alone to pull corn along?
No, I don't, because we've saw, this past week, wheat's had about every day's been good, and corn's had a couple good days, but a lot of sideways action in there too, and we just haven't busted out of that large congestion we've been in for over 2 months. So I don't think wheat's going to do it on its own, because with a 2 billion bushel carryout, and if planting is going well, which I know it's a little slow right now, but there's just not enough energy to get it up and out of here. And so the funds are still in control of this market as well.
Yeah. Again, higher weekly close in soybeans here, but essentially we're range bound there as well, kind of consolidating under the high that we scored the day we had the prospective plantings report. How tough is it going to be to get above those levels with the kind of export demand that we've been seeing?
Yeah, I think it's going to be really hard. I know that we need to get bean oil on board, and so far bean oil is still hanging out at the lows. We know that that is a bright spot of the bean complex, but then also it's how far apart USDA and CONAB are on their estimates for Brazil, and we need to see that narrow up. Who's right, CONAB or USDA? And so when you think about our carryout starting to grow and what's going on in South America with the disparity there of 7-8 million metric tons, the market is looking for some answers. And again, without any direction, the market is going to drift lower as the funds have near a record position on the short side of things.
So Darren, let's circle back and talk a little bit about weather, because you mentioned, possible rains, planting delays, that sort of thing in parts of the Corn Belt, but yet we're getting some beneficial rain in the Western Corn Belt. This weather system, is it bullish or bearish at this point?
I don't think it's neither, because we're too early for it to be bullish, and it's somewhat bearish from the standpoint that some of the driest spots on the drought monitor, if you take a look at the soil moisture indexes, they're getting a lot of rain, and that's going to be helpful building subsoil ahead of the growing season.
So as far as whether you think it's too early to be concerned about weather problems, planting delays, that sort of thing.
I sure do. I mean, if you look back at 2019 when we had all the issues, the market really didn't get excited until around May 12th, and we were already well behind the pace. So far, we're kind of right on pace. So, hey, we put another 2 weeks on the calendar and we're not making any progress, then I think the market will get nervous.
What about South American weather? We've heard about too much rain in parts of Argentina that are maybe compromising the quality and the harvest on soybeans, and we've seen a downgrade of Argentina's corn crop. Is this an emerging story that could impact our market?
Yeah, I really think it is. I think it's going to take time to figure out how much damage and how much crop production we lost down there. But certainly the stunt disease is affecting the later planted corn, which is 55-60% of the crop. And we're hearing that there's some pretty severe losses in certain states down there. Obviously, too much rain is hurting them as far as getting the beans harvested, the quality issue, beans popping out of the pods, things like that. And so too much water coming to that harvest period is never good. I remember 2014 or so, 2015 in that area. I can't remember for sure, but we had a really wet fall and we saw corn and meal and everything rallied because we couldn't get to the crop. And so that's kind of what they're experiencing down there. As a result, I think that's kind of friendly. But until USDA says that it's less as far as crop production goes, the market's just not going to trade it.
Yeah. And Brazil's actually having some pretty hot, dry conditions in the second crop safrinha corn area now, too, aren't they?
Yeah, they are. I think up north, Goiás, Mato Grosso is pretty good. I think Mato Grosso do Sul, Paraná, some of that, in a little bit of São Paulo is where the problem is. And it is warm down there. They've had warmer weather all season for beans and for the second crop corn, but they have had some timely rains in the north and the northeast, and that's helped those northern states out. But I still think that crop could be 5 to 10 million metric tons less, more toward that 115 area when it's all said and done.
Yeah. So cattle had a nice close on Friday after a reversal on Thursday. And again, we made some new highs for the move. So do you think that this market can keep moving higher, especially because cash trade is kind of what pushed us?
Yeah, the cash came along here on Thursday and saw a huge reversal on Thursday, bullish engulfing candle, big candle because we moved $4 off the low. We did follow through today on Friday's trade and closed above the 100-bar moving average. I kind of wanted to see a little bit more, like above 178.80, even 179. But I do think that we're optimistic as we move into next week. The only consternation I have is it's the end of the month. And sometimes you see some squaring up with the funds and things as we approach month end, and that's on Tuesday. I think once we start into May, Wednesday forward, I'd like to see the cattle continue to rally and maybe they jump out of the gates on Monday morning and do just that. But I'm optimistic with what we saw late in the week here.
Mhm. And finally, let's talk about outside markets and kind of I guess, the overall attitude or mood. We got PCE out this morning and, talk about not only the inflationary fears, are they subsiding? What about the geopolitical fears?
Well, we have a lot of uncertainty with what the feds are going to do. They're going to need to cut rates here at some point, but because so many of these commodities, when you look across the basket of the CRB index, for example, yeah, you have 7 or 8 that aren't getting with it, but you have about 15 of them that have been going up, 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 and away. And so there is concern that we're going to enter a recession at some point when the feds start to cut, if they cut. And I think they'll have to do that later this year. When we see the yield curve uninvert, so it's been inverted, but when we see that change back over where short end of the curve is less than long end of the curve, then they will be cutting. As a result of that, we could see stagflation. We could see some things with a poor economic outlook, but yet higher commodity prices. And so when you look at those things, then you look at the geopolitical risks with Russia, Ukraine, the Middle East, what's going on over there. Whether Ukraine gets into NATO or not in May, there's going to be a lot taking place. There's just a lot of uncertainty, and we're seeing a lot of volatility. And I think that volatility will continue as we get into May and enter June.
Buckle your seatbelt, folks, then.
Buckle
All
it up.
right. Thanks. Thanks, Darren. Darren Fry with Water Street Solutions. That's Markets Now.